5 stocks I'm buying now, August 2023 edition. Welcome in, folks, to my favorite video I do on this channel each and every month, where we're about to get into the stocks that I'm buying currently, why I'm so excited to buy these stocks, the risk factors, and all those sorts of things. Now, if you're new here, first off, hello, my name is Jeremy, and I'm a long-term investor in the market. Now, my approach in the market is GVD. There's a reason I have GVD up here right at the first slide here, because my approach in the market is buying growth stocks, value stocks, and dividend stocks. Now, here today in this video, out of these 5 stocks, 2 of these stocks fit into the growth stock category, much faster growing companies. 2 of these stocks fit into the value in dividend category, and one of these stocks I'm going to be sharing in this video is what I call a hyper growth company. One of those type of companies that is growing so fast it's hard to even imagine a public company growing that fast. And so I'm looking forward to getting into all 5 of these stocks. They all have different risk profiles. We'll talk about that in this video. We'll talk about what I believe the upside is for these stocks, what I believe the risk is with these stocks, and many other various things. So appreciate y'all joining me. I hope you enjoyed today's video. Smash a thumbs up if you enjoy these videos each and every month. And if you want to subscribe here, especially if you're new here to the channel, make sure you hit that subscribe button. I appreciate you joining me. And also, make sure when this video is over here today, you check out the pinned comment down there. I put together a free workshop for you guys. It's absolutely free to access that. How I find 10x stocks. Free workshop. You're going to want to access that. So just remember, when this video is over here today and we get through these 5 stocks, remember to go ahead and check that out. It's absolutely free, and it is the pinned comment down. Okay. Now, first stock up here of these 5 stocks. This one, if you're a regular viewer of this channel, you should be able to know this stock. You should be able to say, I know what stock this is going to be, because I've talked a lot about this stock over this past month. I call this stock the easiest money in the stock market right now. Easy money meaning it has such a high probability of doubling over the next couple of years, at least doubling, and has a very low probability of going down in any substantial way, okay? And if you don't know that stock and you regularly watch this channel, what the heck, you should know this one, okay? First stock of these 5 up here is PayPal stock. Yes, PayPal is the easiest money in the stock market, in my personal opinion, right now, okay? So PayPal, what's going on here? Well, first off, it's very important when you understand PayPal, you're buying 2 of the most important finance-related apps in the world, right? If we look at just the United States iOS App Store, 2 of the most popular finance apps on a daily basis are PayPal and Venmo. PayPal owns both those apps, right? The only thing that's usually more popular on a download basis is what it's called Cash App, which is owned by a company named Square. Now, a lot of people think, okay, I buy this company, I'm getting PayPal, Venmo, great, right? You're getting a whole lot more than that when it comes to PayPal. You're getting this company called Braintree. Now, this is a back-end kind of payment processor that, in order to run any sort of business, right, e-commerce business or an app or anything like that, in which is doing transactions, you need some sort of payment processing so you can do those transactions, right? And so think about all the big apps used on a daily basis, whether it's, I don't know, Uber Eats or DoorDash or whatever it is, okay? At the end of the day, somehow those transactions have to be run, right? And this is where Braintree comes in. And so if you want to pause the video and look at all the different customers, Braintree has its pretty phenomenal, and I could almost guarantee you there's more customers than this, just some probably don't want to show their names there and things like that, okay? So this is a business that, the beautiful thing about Braintree and what differentiates themselves versus most other competitors is, the thing is, like, when you go to checkout for most e-commerce companies, right, you don't have very many options to pay, right? You usually have like Visa, MasterCard, American Express, and then many times there's not even any other options. This is 2023, okay? You need to have more than just a way to pay through Visa and MasterCard and American Express, because nowadays a lot of people use a lot more payment options than just those 3 things, right? And so if you want to maximize how much money you're going to be able to make as an e-commerce site, as a business in general, the more payment options you have, the better, right? I still know of a business in actually Arizona, if I recall, it's called Pete's Fish and Chips, this kind of like fast food restaurant chain. They only take cash, okay? And I told my wife this. I'm like, this is 2023. This is such a poor financial decision. Like, imagine how many more customers they would have if they offered just like to be able to pay with a debit card and credit card. Like, that's their own decision, right? But at the end of the day, the more options you have, it's been statistically proven that you will make way more money because people have different ways they want to pay, right? And so they also are able to offer Apple Pay, Google Pay, Samsung Pay, even if you want to do like an ACH, right? You can pay through PayPal, Venmo. So all these different ways of paying, which is phenomenal. And that's one of the beautiful things that Braintree has, that they can bring to an e-commerce platform and say, do you want to make more money? You want to make less money? You want to make less money? Have less options. You want to make more money? Have more options. It's literally as simple as that. Okay. Now, I just thought this was interesting to mention. This company, Braintree, was actually founded by this gentleman, Brian Johnson, who ended up selling the company for $26 million to Venmo, which then Venmo obviously got bought out by PayPal for $800 million. By the way, PayPal stole both those transactions. Like, that was ridiculous. Okay, the fact that they got for $800 million Venmo and Braintree is like, it's one of the best acquisitions in the history of mankind. But anyways, this Brian Johnson guy is something random and interesting. I don't know if you guys have ever heard of him before, but he believes aging is a disease, and there's a cure for that. So it's interesting what his company's doing there. Okay, now, when it comes to PayPal, here's why I'm stealing money in regards to PayPal. Okay, here's the deal. This company is trading right now at about a 13 times next year's numbers. Okay, now keep in mind the market in general trades at maybe an 18 to 20 range. Now, a company like PayPal should be trading at a 30 plus, like in the 30 to 40 range as far as the forward P, based upon the industry they're in, how safe their business model is, and the fact that they have a substantial revenue growth coming for many, many years to go in the future. So this company could double tomorrow, and it would still be an undervalued stock. This stock could go to $150 a share, and it would still be undervalued. That's where things get very, very appetizing when it comes to PayPal stock here. Now, the other interesting thing is, analysts only have this company growing about 7.5% this year and about 9% next year. Both those numbers are low, in my opinion. I think PayPal is going to come in with double-digit growth, very strong double-digit growth in the back half of this year, and then double-digit growth again next year as well. I think just analysts have gotten way, way, way too bearish in terms of revenue on PayPal. The e-commerce space has been in a recession. Let's just call it what it is. It's been in a recession for, about a year, and it's going to come out of that recession in the back half of this year in terms of the space in general, and you're going to see PayPal's numbers boost up in a pretty substantial way. I'm talking across PayPal, Venmo, and across the Braintree platform as well. Now, there's been one major holdback of the stock, other than just analysts being far too bearish on it and the valuation just being on the floor. It's a major holdback. And that is the fact that the CEO is stepping down from the company at the end of this year. Okay? Now, the reason this is kind of a holdback is we don't have the new CEO announced yet. Okay? Now, they're going to be able to bring in my opinion, a top tier next CEO for PayPal. I don't think there's not a better job opportunity in the world right now than being the PayPal CEO. There's no opportunity because Apple CEO Tim Cook, he's still going to be there for a bit. Microsoft CEO is still going to be there for a bit. NVIDIA CEO Jensen's not going anywhere. Elon Musk is not going anywhere from Tesla. So you run through all the biggest companies. All their CEOs are set for quite a while. The only one that's an option out there for like a great company that you want to be the boss of is PayPal right now. And so PayPal is going to be able to attract a top tier talent here. And I believe this is $1 billion opportunity. I believe if the CEO does a really good job based upon how low the shares are right now, the stock options that individual will get over the next 5 years or so, I believe this is $1 billion opportunity. If this CEO comes in, does a great job with the business, does a great job getting the valuation back to where it should be, which is a PE in the 30 to 40 range, I believe they'll make over $1 billion of compensation in a 5-year span. Okay. Now, is that like soccer money that you can get from Dubai or something like that, or the Middle East? No, okay, not quite that level. We're not talking Messi, but outside of that, that's a pretty darn good opportunity. No, PayPal is going to be able to attract somebody not just because of a huge financial opportunity, not just because PayPal is one of the best jobs you could possibly imagine in terms of if you're a high level of performer, but if you go through PayPal's board of directors, it's one of the most impressive, if not the most impressive board of directors you will find of any public company in the world. I'm not going to go through all their backgrounds, but if you ever have time and you want to surf around PayPal, check out their board of directors and look at the history of these folks. It's incredible. And speaking about history, okay, you ever heard of the PayPal Mafia? Have you ever heard of those folks, right? These are some of the most brilliant men we've ever seen in business history that started this company, right? And really put all the pieces together that built this juggernaut that ended up becoming this company, right? And it's just fascinating. Like, if you ever have time, Google all these different individuals and see what they founded over time. You're going to realize, holy smoke, is this no joke? I mean, we're talking about trillions of dollars of valuation these folks have been part of. Literally trillions of dollars. Absolutely fascinating that all these individuals worked, in some capacity on making what this company is today, making this happen. It's an incredible, incredible story. Now, in terms of PayPal, where am I going to buy this stock to? What am I looking at here in terms of that, right? And where will I potentially sell the stock at? Well, in terms of buying the stock, I'm planning to buy the stock all the way to $150 a share. Now, this is why I believe I have the remainder of this year to buy PayPal stock. I do not believe PayPal is going to 150 by the end of the year. It's always a possibility, and especially when you see moves like have happened in Meta, Nvidia, stocks like that. By the way, this is the easiest money I've seen in the market since I saw Meta, obviously, in Q4 of 2022. But I think it's a pretty low probability the stock over doubles up by the end of the year. So I think I have the rest of this year to buy the stock, and I think I have potentially the first half of 2024. Potentially. I'm a little more concerned with. I think for sure the stock will be under 150 for the remainder of this year. Next year, I'm a little concerned about that because by that time they'll already have this new CEO announced. I think the growth rates will already be out there, and people will start to look at this company very differently than they're doing now. Okay. Now, in terms of where I consider even potentially selling the stock, I would consider selling at 300 plus for this stock. Okay. And when it comes to PayPal, I really look at the stock and I'm like, there's no real reason for me to jump out of this anytime soon. Like PayPal and Venmo are going to, I don't know when those stop growing, but those have such a long way of growth ahead of themselves, right? The Braintree platform has such a long way of growth ahead of themselves, right? The management team has said they're working on a lot of products and things right now, right? Because they got an incredible team at PayPal that we don't even see yet. There's so many new products, services, features that you're going to see come out over the next 1 to 2 years from PayPal. There's going to be massive new businesses for this company that we're not even talking about here today. And I listened to some of this innovation. They did a basically kind of like an investor day about a month ago or so, and I listened to this and I'm like, oh my gosh, the type of things this company's working on, just no one's going to be able to really duplicate the type of stuff because they're very complicated problems. Everybody thinks, oh, this is just so easy, you just do this. No, and there's a reason everybody wants to compete in this space. I mean, you even heard Elon Musk in what he wants to do with X and those sorts of things. Everybody wants pieces. The problem is the problems are extremely complicated to solve, and you need an extraordinary team of folks to work on these problems. And PayPal is really one of the only companies in the world that has that sort of team, okay? I can make an argument that maybe Square has a sort of, team, but I think just PayPal has a creme de la creme. Got a great balance sheet, great income statement. It's a straight cash flow business, super undervalued. When the new CEO gets announced, then the future is going to be looking a lot brighter because then we'll know what direction the company's going. So it means Wall Street money will be able to come in because a lot of Wall Streeters can't really buy this stock right now because they're like, well, we don't know who the new boss is going to be. So how am I going to buy the stock if I don't know what direction the company's going to take? Are they going to take a cost-cutting approach, a growth approach, a little bit of a combo, right? And so when it comes to PayPal, it's just easy money. Easy money for me over the next several years. And I think the upside is pretty ridiculous in this stock for the next several years when it comes to PayPal. So yeah, I'm really, really happy to be a shareholder of the company, and I'm looking forward to buying a whole lot more shares for at least the rest of this year, if not into next year as well. Okay. Alrighty, that's first stock up here of the bunch. That's a growth stock, obviously, but it's a great one with this one. It's a growth stock trading like a value stock. Next one is a growth stock trading like a growth stock, okay? And that stock is number 2 of 5 up here is Amazon stock. I love this one, okay? And by the way, Amazon's kind of had a lame last 5 years. It's only up 48% in the past 5 years. For Amazon stock, that's actually a really poor performance. I do not believe that will be the type of performance Amazon has over the next 5 years. I believe it will be far better than that. Now, when it comes to Amazon, there's a few things you got to understand, okay? First thing with Amazon, you're getting the giants, okay? So there's 3 gigantic businesses you're getting when you buy Amazon. AWS is first. Now, the reason I listed that first, even before I listed e-commerce, is because when it comes to Amazon Web Services, this is what everybody really cares about on Wall Street. This is the main profit center for the company. And this is seen as a bigger long-term potential, actually, than the e-commerce business, which is mind-blowing to think that, right? And I remember Jeff Bezos talking about this years ago. he spoke about the potential that AWS would be bigger in the e-commerce business. Back then, people said, what? Are you crazy? Are you mad? Now, if you ask the average Wall Street person, they will say Amazon Web Services is the most important business for Amazon. It's more important than every other business, which is crazy, okay? But much of the backbone of companies is run on AWS now at this point in time. They obviously have the e-commerce juggernaut, which I'm sure you see, a million Prime vans running around your neighborhood on a weekly basis, right? And I'm sure you're probably ordering more and more stuff on Amazon as the years tick on. I know certainly I have. I remember it used to be, I was speaking to a friend about this recently. I said, I remember when I first moved out of my parents' house, that was in 2011. And I remember I might order something from Amazon once a month, once every other month, something like that. It was pretty rare. And then when I moved from Glendale, Arizona, I moved out to Charlotte, North Carolina to help Quick Trip expand out there, right? And I remember I started ordering, things every single month, sometimes even a couple things a month, right? And then I remember moving from Charlotte, North Carolina to Henderson, right? To Henderson, Nevada. And it was incredible because next thing you know, I found myself almost starting to order something every week. And I can tell you nowadays in present day, 2023, living in Las Vegas, I order stuff from Amazon, usually several things every week now at this point in time. Almost anything I can think of, like just random simple stuff. Like last night even, I was like, I wanted to get a stretching band, like a stretching band. And so where's the first place I'm going to look? Amazon, boom, $15, bought it. Like, it's just like almost first thing that comes to mind if I'm going to buy something. I'm like, hey, I need something, or I want something for the house, or I need this, or I need that. Amazon. And it's just so convenient. You go to the app on your phone, you buy the thing, it takes like a few minutes, and you got the reviews all there. It's beautiful, right? So that business is a juggernaut that's just going to keep growing when does the e-commerce business stop growing? I can tell you it's not in this decade. It's probably not next decade either. So someday the business will finally peak, but it's no time soon. The advertising business is an absolute juggernaut that no one even talked about the advertising business for Amazon a few years ago. And now this business is becoming so substantial that you can't miss it when it comes to Amazon. And then you get the smalls, okay? We'll call them the smalls. Businesses like Twitch, businesses like Whole Foods, and many other companies that Amazon owns as well, okay? Now, AI. A lot of people think of NVIDIA when you think about AI, okay? Here's what I'm here to tell you here today, okay? AWS is the most underrated AI play probably in the stock market, okay? There's no doubt about it. When I think about what AWS can do in the AI space, and when I think about how this company will benefit for years to go and decades to go from AI, it is substantial. And I'm not just talking about with their business, right, and making better decisions, but I'm talking about running AWS and having companies make better decisions and having a lot of their, let's just call it AI products be on the Amazon cloud, okay? So I think this is just an epic opportunity. I think Amazon's one of the most forgotten AI plays in the stock market, and I think they're one of the biggest beneficiaries of AI long term. I mean, after I think about a company like NVIDIA, I start thinking about, okay, who's the second to really benefit from this? And I think about three companies come to mind, okay? These aren't the only three companies, but these three companies come to mind. Microsoft comes to mind, okay? AMD comes to mind. Let's say four companies come to mind. Palantir comes to mind, okay? And the fourth company is Amazon comes to mind. And so you just got to understand there's going to be a lot of companies that benefit huge over the coming years and decades from AI outside of just NVIDIA. NVIDIA is just the, let's call it the starter engine of this whole game. Now, if we go ahead and take a peek at Amazon's balance sheet, the thing that's incredible with Amazon is they just continue to build a fortress balance sheet here. Check this out. Total equity, if we go back to 2019 for this company, total equity was about $62 billion. Total equity 2022, end of 2022, $146 billion for this company now at this point in time. And I believe they'll likely have a total equity of about $170 billion, roughly, at the end of this year, folks. That speaks volumes to the fortress balance sheet that Amazon's building out here. Incredible cash balances, obviously. And Amazon's slowly building into one of the best balance sheet companies in the world, right? Absolutely. And the great news for Amazon is they've built out a lot of their infrastructure. This does not mean they're not going to have to continue to spend on CapEx here and there to continue to build out their infrastructure, but I'm just telling you, the money they've spent on AWS over the years, the money they've spent on their infrastructure, I'm talking, they basically built a UPS. Like basically they built their own UPS through their planes, right? Through obviously all their trucks and everything, and they built that in a matter of a few years. And when you think about their warehouse network, everything like that, like if anything, I think this company over the next few years is going to be a little light on spending on CapEx for the next few years because they spent so much, especially during Rona. Oh my gosh, the spend is ridiculous. And so now Amazon's going to be able to just stack a lot of cash over this next few years. And I mean a lot of cash. And don't be surprised if Amazon ends up having the best balance sheet in the world within 2 to 3 years. Don't be surprised. That's all I'm going to say about that, okay? Now, in terms of me personally, where am I buying Amazon stock at? How, when would I consider selling it? And those sorts of things, okay? Here's what I'll tell you. I am planning on buying Amazon to $150 a share. I've been an aggressive adder of Amazon pretty much this entire year, right? But, when it comes to Amazon, do I even consider holding? No. This is just, do I consider selling? In terms of holding, this is just a hold this decade. Because when you own a company that has such a long runway of growth ahead of itself, right? You don't even think about really selling it. When you think about Amazon, I think about unlimited growth potential, at least for this decade, if not the next decade as well, right? When I think about AWS, like the company's just going to continue to grow for so long in the future. When I think about the e-commerce business, when I think about the advertising business, these businesses just have such long runways of growth ahead of themselves that there's no reason for me to jump out anytime soon. This is one of those that any major dips, like let's say we have recessions in the future, anything like that, market goes down a bunch, any of those sorts of opportunities, in my opinion, is buy the dip opportunity in Amazon. Not like, oh, let me sell it like this. And there's a perfect example of a stock that I've been buying for years now at this point in time that reminds me very similar of Amazon. And that stock is Meta, okay? Meta is a stock that I bought on and off for years now at this point in time. Meta, I've just always looked at it as one of those stocks like, I don't really want to sell it. It's just one of those, buy, throw it into the filing cabinet, and, they got a long runway of growth ahead of that company, right? And so I've been buying Meta for years, literally for years. And just whenever I see a, great opportunity to buy, I'll buy some more shares of Meta. And here's the deal, okay? Check this out. This is just a bunch of shares I've acquired in Meta over time, okay? I started buying the stock in the public count back in July of 2018, right? And then I remember we had a big, huge market dip in late 2018. I got some shares for very cheap there, right? And then we got the gift of all gifts last year in regards to Meta, right? Christmas came early. That was insane. Like Meta going under 100 was ridiculous, right? And just bought up shares. So this is the way I look at a great company that has a long runway of growth ahead of it. Is you buy, you throw it in the filing cabinet. If there's any major market crashes, major recessions, something that sends the whole market down huge, you go ahead, you buy more shares of that stock. But there's really no reason to try to time in and out of those and try to play that game, because with great companies like that, you own them. You don't trade them, okay? And there's, this is one of those rare companies that you can just hold for 5, 10, 15 years and be a happy camper. And any major dips you get in that stock is nothing but a gift. It is giving you free money. And you can choose to take that money, or you can choose not to take that money. Apple's been a great example of one of those stocks for the past 15 years, 20 years, really. Apple's a great example for the past 20 years of, one of those companies you've just been able to buy. And then any dip in that stock has been a great buying opportunity. And there's been a lot of them. The great financial crisis was one of those. Obviously, after Steve Jobs passed, there was a lot of worries about Apple. In 2015, 2016 there was. At the end of 2018, the Rona crash, obviously, late last year. You have some of those companies sometimes that just every dip's a buying opportunity, and that's the exact way I view Amazing's on Amazon stock, okay? Third stock up here. This next stock is a value stock, dividend stock, with a little twist of it. It's also a turnaround play, and that is Foot Locker stock. Ticker symbol on this one is FL. This one's had a horrible past 5 years. The stock's down 46% in the past 5 years. Awful, okay? But I'm here to say I'm a huge believer in this Foot Locker story, and I am actively buying shares right now, and I Probably not going to stop buying this one anytime soon, okay? Now, when it comes to Foot Locker, this is a dividend value play, right? It's trading extremely cheap. You look at the PE metrics, and we'll go through those in just a moment. It's an insane dividend payer. We'll go through that in just a moment. But it's also a turnaround play. Now, if you're going to buy into a stock that's a turnaround play, right? Because right now Foot Locker is closing some different stores because they own several different brands, actually, outside of just Foot Locker. They own Champs and a few other brands. So they've been making some tough decisions to close some stores, to restructure some things in their business model so they can build into the strongest company moving forward. And whenever somebody's doing that, you got to say, okay, whoever's the big dog there, the CEO, do they have what it takes to execute this turnaround, okay? And the one that's executing this turnaround is a lady named, this is her right here, okay? It's Mary Dillon, okay? Now, some of you guys might have never heard of Mary Dillon before, so let me educate you for just a moment here, okay? Mary Dillon, an American businesswoman, CEO of Foot Locker, which, by the way, she took over the company, oh gosh, that was at the end of 2022, okay? She was a CEO of Ulta Beauty. Ulta Beauty, by the way, one of the best stocks in the stock market for the past 15 years. A beauty retail company from July 2013 until June of 2021, when she became chair. She was the global chief marketing officer and executive vice president of McDonald's from 2005 to 2010. She was a CEO and president of U.S. Cellular from 2010 to 2013. And Dillon is also a non-executive director of Starbucks, okay? Her experience, her success speaks for itself. I'll just put it that way, okay? You're not going to find, very many people that are more successful than her and obviously what she's done in the corporate world over time. So she definitely has the pedigree of somebody that can pull off this turnaround. There's no dang doubt about it, okay? Now, you know what I think is very interesting about the decision of bringing Mary Dillon to run Foot Locker is it's obvious choice in terms of, like, if you're going to talk about who you want running a company, especially for executing a turnaround, like Mary Dillon. Like, who wouldn't, of course you're going to pick her, okay? But what I think is very interesting, I was doing a little thinking about this, actually earlier today, and I was thinking, she's such a great choice for this. And the reason being is, if you think about her experience at Ulta Beauty, right? Ulta Beauty, their customer base is mainly female, obviously. I mean, if ever I go in Ulta, I feel like, like, what the heck? Like, what? I don't know. I feel subconscious. Like, is everybody looking at me? Like, do they think I'm going to rob the store or something like that? Like, what's going on here, right? Because you go into an Ulta and it's pretty much all women. So it's very interesting that they chose her because if you don't know, like, the women's sneaker market has been growing massively over the past 10, 15 years, and that is showing no signs of slowing down anytime soon. Even if you look at, like, Nike's numbers, over the past few years. Nike in 2020 did about $6.9 billion of revenue from their women's category. This past year, they did almost $8.3 billion of revenue from their women's category. It's a massive growing space. And so I think to pull in somebody like Mary Dillon is very intelligent, right? Because we always know Foot Locker is going to do great with men like myself, but, if you're a woman, would you feel, comfortable shopping at Foot Locker? Is that a place you would look forward to shopping and things like that, right? And so I think her choice is a very, very interesting one. Now, the other thing you got to ask yourself is not just can the person that's in charge pull off this turnaround, do I have faith that they can pull it off, but does the company have the balance sheet to pull off this off? Because if a company doesn't have the balance sheet to pull off a turnaround, they can't pull around the turnaround. Doesn't matter who's the boss of the company. And I will say, Foot Locker has the balance sheet to pull it off. You're looking at a company that has about $2.4 billion in total current assets versus $1.4 billion in total current liabilities, right? If we look at total assets, $7.6 billion versus $4.3 billion, the total equity on the company is nearly $3.3 billion, right? Now, the most fascinating thing about that is about $1 billion less than the market capitalization of the company, which is just another way of saying you're getting a steal deal here in regards to the stock, especially if Mary Dillon can execute the turnaround. I think she can execute here, okay? Now, here's the deal. This stock is trading based upon what analysts have next year's numbers being, right? Their fiscal year ends kind of weird. It ends in January 2024 instead of December 2023 like most public companies, right? But we're looking at this company, right? And we're talking about a company that, based upon analyst estimates, is trading at about an 8.6 4P. That's ridiculous, okay? That's ridiculously low. Now, keep in mind, that number could be low. If Dillon gets this company in position this year, then next year could be kind of like, Steph Curry from a wide open three, okay? It could be just looking real, real good. So I'm getting this company for disgustingly cheap, and if anything, I think there's a lot of room for upside expansion in terms of EPS numbers. And if there is, that means the company I'm buying right now is actually far cheaper than what I'm paying for here, right? The risk is always, Mary Dillon can execute this turnaround, but once again, I think she's got the pedigree to do this. Now, this is one of the most important charts for a company like Foot Locker, in my personal opinion, because when you think about Foot Locker's customer base, okay? I mean, Foot Locker's customer base can be anywhere from, I don't know, the 18-year-old that works at Chick-fil-A and needs a new pair of running shoes or a new pair of shoes for the gym. It could be this, 40-year-old truck driver who makes $75,000 a year and wants a new pair of Jordans to wear, out to eat on the weekends, a Cheesecake Factory or Texas Roadhouse. Let's hope he goes to one of those two places, okay? And so their customer base is everything in between there. It's really, when I think about a company like Foot Locker, it's really just a company that's middle class, that's going to, just that type of company, right? And so when real wages is one of the most important and underrated metrics in the overall economy. And this is a look at real wages. Now, real wages were in a bad spot for a long time, okay? Basically from the Rona shutdowns, right? All the way through until things bottomed out in 2022, about halfway through the year or so, real wages were in a horrible place. And real wages, basically what it is, it looks at median usual real earnings, right? It is CPI adjusted dollars for folks out there. And because at the end of the day, let's imagine you get a 5% raise from your workplace, but let's imagine CPI is 9%. Well, you didn't get a raise, you really got a pay cut, right? Because at the end of the day, everything you buy is so much more expensive. But we're finally going through a very interesting time right now, where CPI is dropping huge to much lower numbers, but real wages are really in a really, really good place right now. I was even on the Texas Roadhouse conference call last night. They were talking about wages being up 6 to 7% year over year. Well, CPI is at 3% right now, and in reality, it's actually in the 2s, in my personal opinion. So which means real wages are finally picking up, which is great for everybody in general, but that's really, really good for a company like Foot Locker. That matters significantly. And the only reason Foot Locker's was able to hold it together there for a bit, and why their numbers look good at the end of 2020 and into 2021 was because of stimulus. Okay, it wasn't because of real wages. It's just there was all that stimulus money pumped out there, and PPP loans and all that stuff. Okay, and so it definitely helped out their business substantially. Now, the beautiful thing with Foot Locker, and this is absolutely beautiful, is I get to collect a fatty dividend while I wait for the turnaround. Okay, because I don't know how long this turnaround is going to take for Mary Dillon. Maybe it takes 6 months. Meaning the next several quarters for the remainder of this year. Maybe it takes another year for the turnaround. Maybe it takes 18 months, right? 6 quarters. But all I know is while this turnaround is executed, I get to just sit back and collect this massive dividend of 6+%, which is absolutely beautiful. I love that, okay? And so Foot Locker's in a really, really good position. I'm happy to be a shareholder of the company. I'm happy to buy more shares of Foot Locker. And I'm really excited about this one. Am I going to build it into as big of a position as I would like an Amazon or a PayPal? Absolutely not. Okay, no, I'm not going to build a position in a turnaround play that substantially, right? But I'm going to still build it into a nice size position. I'm going to collect that dividend money. I'm going to buy either more Foot Locker shares with all that dividend money I'm going to get paid, or I'm going to buy other stocks in general with it, right? And just continue to compound that money. That's the one beautiful thing about dividends versus a growth stocks. Growth stocks, in order to actually finally make money, you got to sell the stock. And that's kind of painful because a lot of times you don't want to sell these stocks. Do you really want to sell Tesla or Meta or Amazon or even PayPal in these companies? Not usually. So the nice thing about those dividend stocks is if things go right, that the share price appreciate over time, which is beautiful. But you also get that dividend money paid out to you. And remember, here's the other factor with dividends that's always forgotten. I'm getting a little over 6% dividend yield on the shares I'm getting today. Now, imagine Mary Dillon executes this turnaround. Company starts earning $4, $5, $6, $7 a year in EPS, which I think is a potential. Well, on the shares I'm buying today, the dividend longer term could end up being like a 10% yield, 15% yield, 20% yield, which is insane. There's shares Warren Buffett bought at Coca-Cola that basically, if I recall, he's basically getting on a yearly basis paid out the same amount that he bought those shares for back in the 80s. It's ridiculous, right? And so, once again, that's one of the beautiful things about dividend stocks, okay? Next one up here is another dividend stock. This is a very simple one, and then we'll get into a hyper-growth stock, the strongest growth stock of them all. And this dividend stock is Target stock, okay? Simple. Okay, dividend yield 3% plus. PE on this stock is about 22. That's a trailing PE, so do keep that in mind. As far as this year's PE, we're trading at about 16.5. Based upon next year's numbers, about 13.4. So I'm getting undervalued valuation on the stock right now. Expected to do $110 billion of revenue this year, $112 billion next year. Simple. I mean, this is just simple, if sleep well at night. Like, I'm not going to have any problem sleeping owning a stock like Target. Like, very easy buy. Any major dips I can buy. Nothing crazy here, right? In life, you got two options, right? If you need to go to a physical store to go buy stuff, you usually have two options for you. One is you can go to Walmart and you can press the button and hope you can get an energy drink or something like that. You're probably, there's a decent probability you could get in a fight while going to a Walmart. My dad, he used to call Walmart a poopy diaper store or something like that. He used to call it poopy diaper store, and he used to say because the few times he ever went to Walmart, he was always poopy diapers in the parking lot. And so that's your option. You could go to Walmart, right? It's always an option for you out there, right? And you can maybe save a few pennies here and there, or you can go sip a frappuccino, have a pumpkin spice latte, and walk around in a beautiful Target. There's options in life, right? There's options in life. So yeah, Target. Very easy buy, not complicated for me. They're going to be around, going to be relevant, and I really like the innovation, obviously, the company's been doing over the years. They've even included a lot of remodels for Ulta stores inside Target stores now at this point in time. Their food section has improved dramatically over the past 10 years. Like, no one took Target seriously from the food category 10 years ago, even 5 years ago. And today, I go to Target probably 2 to 3 times a month, I would say. And I can tell you, I go by the food section every time. And a lot of times I'll buy food and drinks from Target. It's always freaking busy here in Vegas. Always busy. So it's just very, very interesting. All right. Alrighty. So that's Target. Very easy buy. The hyper growth stock of the bunch that I'm very excited for is Avant Brands. Okay. Now, Avant Brands, super growth company, ridiculous growth company. But it is a super small company. I mean, market capitalization like $40 million, which means it's super speculative. Stocks like this come with big risk. Amazon, PayPal, Target, Foot Locker, those type of stocks, I mean, they all come with risk, but the risks are minimal compared to a stock like Avant, which is a super small market cap. These ones can be all over the place, right? And so when I look at a stock like Avant, the beautiful thing I like about this one, and by the way, it's only one of 2 stocks I like in the Jack Jackson category. They're kind of like the Louis Vuitton of Jack Jackson, is the best way I could put it. Whereas most folks in their space that compete in this space, they've gone with a very bad approach. It's been, let's flood the market with poor quality product, because this is a product category that some products much better than others, okay? And you can ask anybody that's very experienced with these products, and they will tell you, yes, some of these products are a lot better than other product, right? And when it comes to a company like this, they're really competing on the high end. They're really trying to make the best product possible that's really unparalleled in the marketplace, versus a lot of these other guys went with just, let's try to grow as much as possible and sell it for as cheap as possible. And now many of those companies have gone bankrupt or in the process of going bankrupt right now. Versus companies like Avant that are looking like they're going to be in a better position than the other. Who would have thought it? Make a quality product and actually have your business prosper long term, right? And actually reap the benefits of that. So when it comes to this company, you got to understand, whenever you're buying into a small cap stock, right? And this is the way I think about this. And I own a lot of shares in the stock now at this point in time. Well, a lot is a relative term, right? It's a lot of shares, but it's actually a small dollar amount because the stock's so cheap. But the company's really run by these 3 gentlemen, right? They're going to be the ones that are going to make or break this company over time. Miguel Martinez, he's kind of a newer CFO with the company. So it really comes down to Nort and this gentleman, David Lin, which, by the way, I think Nort should talk more about David Lin in the future, in my personal opinion. But, Nort's done a really good job running the company as far as the numbers go. Like, look where this company was 3 or 4 years ago with their revenues, their profitability, everything like that. And look where the company is today. He's been executing a very amazing kind of turnaround here that's getting very, very exciting. When it comes to numbers, here's the latest numbers that the company reported. Gross revenue came in with a record quarter. It was up 101%. I mean, that's insane. Gross revenue of $9 million. Now, remember, that's in a quarter. That's in a 3-month span. And the whole company trades for a market capitalization of $39 million right now. That's pretty flippin' flapjacking insane, right? Like literally, if they could do 9 million a quarter, then we're talking about over the course of 2 quarters, you're at 18 million, you're talking about 36 million in a year, right? And it's assuming the company wasn't to grow anymore, and obviously the company's in rapid growth mode right now. So it looks like this company very soon here, maybe even this year, could be growing, could be at a place where their revenues are more than their entire market capitalization of the company. Like, that's insane to think about, right? Total net revenue at $8 million, up 96%. Recreational net revenue came in at $4.8 million, which is up 53% on a year-over-year basis. That's insane. Export, which their export business is growing rapidly right now, was up 311%. Overall gross margin came in at 34% versus 23% in the past. And that was even with the fact that they had to liquidate a bunch of inventory. Because basically they, bought out this company completely, flour, and they had to liquidate all this inventory. And so even with that massive liquidation of whatever prices, and Norton talked about that on the call, he's like, we just need to get rid of the product. They still reported that sort of growth in gross margins. That's pretty impressive, right? Gross margin dollars came in at 2.7 million. And their export business, gross margins came at 37%. That's a really, really nice number. They also announced that they just received an order, a $2.8 million purchase order from a single export client in July of 2023. That's pretty darn exciting. They just received new product listing approvals on several different products, and they negotiated and executed new export supply agreements, with Avant signing its first export contract pertaining to the German market in July 2023. You know the Germans, they want the good product, man. They don't want the cheap stuff. They want, okay? They don't have time for all that. So nonetheless, and then the credit facility they just announced recently, $3.5 million, which puts the company in a very good, I guess you can say, financial situation. And obviously, this company's kind of flipping the script over to profitability. And so with a company like Avant, if this company can just start doing $1 to $2 million of positive net income a year, it is a game changer for this company. Not a year, a quarter. If they can just start doing $1 to $2 million of positive net income a quarter, it's a game changer for the company, because then you could be talking about $4 to $8 million of net income a year, right? On a market cap that's $40 million. Obviously, the valuation would have to go up immensely in that sort of situation. I think a lot of people are just kind of keeping an eye on the net loss and net income line and trying to see like what's going on here. And once this company flips to net income, if they can do it sustainably quarter after quarter, game changer for the company, because almost every other company in the Jack Jackson space loses money. And most of these companies lose a fortune. If Avant can be seen as the one company that's a profitable company, do you know the sort of money that's going to flock over this stock? And so my hope is, when it comes to Nort, that he gets this company over to a position where they actually start bringing in positive net income quarter after quarter after quarter. Because if they can do that, the sky's the limit with this stock, okay? And so, it's a very speculative position. We'll see what happens with it long term, and I'm hoping things work out. It's one of only 2 stocks I like in this entire space. It's Avant and Planet. They're the only 2 stocks I like in this industry. They're the only 2 companies that I believe the management teams have their heads on straight. Their balance sheets are in a good enough position to weather any storms, and I think both of them have bright futures in front of themselves. I think someday we'll be laughing about the days that these stocks were penny stocks. We'll see, okay? So, hope you guys enjoyed today's video. As always, I appreciate everybody joining me. Thanks so much, folks. Make sure you smash if you haven't already. And if you were new here and you enjoyed the video, hello to you. And make sure you subscribe to the channel. I appreciate y'all joining me. As always, make sure you check out the pinned comment down there and access that free workshop, How I Find 10X Stocks. It's absolutely free to access that. Pinned comment down there. Enjoy, much love, and have a great day.